Well, hello, YouTube. Hello, X. Welcome to the Daily Factor. I appreciate you for being here. Hey, Jackson, you want a treat? Come up here. You got to come up here. All right, Jackson. Good boy. Good boy, Jackson. All right. How's everybody doing tonight? Sorry this is late. I was supposed to go live at 9 Eastern, and it's now 9. Or I guess I'm supposed to go live at 8 Eastern. But yeah, it's 8:27 Eastern. Anyway, my bad. I'm late. Whatever the case is, I'm late, and I'm sorry. But thank you to the 5 folks that are here. And sorry I had to cut the stream short this afternoon, but I wanted to get him to the dog park before it got dark, which I did. The dog park went great. He had a lot of fun. It'd been raining all day, and he hadn't had a chance to get out of the house. So anyway, I appreciate that. How's everybody doing? All right, it's Misty Monday. So what even is the Daily Factor? So the Daily Factor is my own proprietary metric that I invented to evaluate these high yield ETFs. Total return works all right. It darn sure works better than yield. Do not look at yield to compare high yield ETFs. You can have two ETFs that yield, 50%, and they can be vastly different as far as a lot of stuff goes. But even total return, you can have two ETFs that have a total return of 20%, and they can be different also. So I made this metric to make an apples to apples comparison and really get into dissect what makes up a good total return and make a better metric. Whenever they invented these high yield ETFs, the high yield ETFs, they really pay too much. They really do. Nothing should pay that much. I mean, that it just is ridiculous. So you should be able to have an asset that gives you a yield of 100% or even 50% or even 30%. It's ridiculous. So I had to invent a new metric that is a way to judge these on an apples to apples basis. Hey, Trucking for Dividends. Thank you for being here, bud. All right. So let's get this show started. Let me do this. Let me get my second monitor set up. All right, let's get the second monitor set up, then I'll share it with you guys. Maybe while we're waiting on people to get here, we ought to look at the market. I know I haven't shared the screen yet. It's because I'm still getting stuff set up. I just hope this bounce can hold. It's already turning around in after hours, but okay, I'll share the screen and show you what I'm looking at. I've been typing another video all day and I pulled a muscle in my arm. It feels like I have I don't know, it hurts so bad because I just sat there and I typed all day. I've really been working on a new video. And anyway, I was going to try to record it before this show came on, but I decided I'd record it afterwards. So I'm going to probably try to cut this a little bit short also tonight so I can go record this new video. All right, let's look. So this darn market, this is Bitcoin. Bitcoin topped out about 89.3, and it stopped right exactly where I would expect it to. I mean, yeah, that's not good. On the other hand, it's not necessarily bad either, but I mean, it's not good. So if you look at Bitcoin, the price of Bitcoin, everything was going all right. And it made a temporary bottom about 95. It also made a bottom about 100. Anyway, it made a bottom about 100, but then when it fell out of that range, boom, then it fell down here into this range at 95. Well, we had like a double bottom. We bottomed at 94 and 93, whatever. Boom, we fell out of that range, and then we came down and started a new range. But then even when we rallied, we couldn't get above where we fell out of that range. Same thing here. When we fell out of 99, we rallied back up. Couldn't get back through it. Just a classic sign of distribution or a bear market, whatever you want to call it. Not really a bear market. The bear market happens because it's down more than 20% and it's under the 200 period moving average. That's my definition of a bear market. especially when you're both of those. When you're under the 200 and down 20% or more, yeah, it's a bear market. But anyway, so then you can see, then we stabilized at 94, 95, something like that. But then we fell out of that range. It came down to 89, rallied back up, couldn't get back through that range, stopped at 93. Boom. But then we tried to make a stand here at 89. Okay, we made a double stand, boom, and then we fell through that range. Today we came up and we couldn't get through it. Until we start taking back some of these higher ranges, really nothing's changed as far as I'm concerned. Now the market's not 100% correlated to Bitcoin either. The market's, but I'm just saying, but it is kind of a risk on asset. So we'll see. Let's see how stock index futures are trading. It's still a vast improvement over what was happening yesterday. So stock index futures, kind of the same thing going on. I mean, well, not really. Well, this yellow on the chart was the gap that was created. I forget the news event. What caused that? Oh yeah, it was Nvidia hitting earnings. They hit earnings, but it turned out to be a bull trap, and they just sold it right. Anyway, so I would expect sellers to still be in this area at least the first time. And if there aren't sellers, if we can get through this area, that means that this may have been a bear trap. I mean, this could all be a bear trap. This could be a bull trap. Sometimes they trap on both sides, but we'll see. We'll definitely see. Other things being equal, I would rather we could get through that area. NQ futures are kind of dealing with the same thing. All right, so let's get this show going here. I appreciate you guys for being here. So where is my graphic at? Okay, so the graphic, the daily factor. So I've already explained it. Also, remember, this is not financial advice, consultant, professional financial planner, a licensed financial planner, let's just say. All right, so let's meet our lineup. Now, I decided to throw Coinbase in too. Coinbase is pretty much very correlated to Bitcoin also. Maybe not as much as Mr. It's not like a Bitcoin treasury company, but it's close enough. So it's going to be Msty and Coinbase Monday, if that's all right. We still call it Msty Monday because Monday doesn't start with a C. If Monday started with a C, we would call it Coinbase Monday. But hey, Brad, how are you doing? I haven't seen you around here in a while, bud. I appreciate you being here. Brad is one of my oldest commenters. I've been friends with Brad forever. I remember when I went to, I think it was you. I have two people named Brad that are very supportive. It may have been the other Brad, but you guys are both very supportive, and I appreciate you in either event. The reason I get you guys confused is because your handle's Whistler Brad, and the other Brad is also from Canada, but he's from the other part of Canada. So I get you guys confused, but you're both great guys. Okay, what have you been doing, Brad? You're good. You've been watching your shows, just not live. Well, cool. All right, so let's get this daily factor show on the road. Okay, so we always start with the highest yield. So MST is kind of a mess. I mean, it's double leveraged. I mean, MSTW is leveraged also. MSTW is leveraged 20% a week. MST is leveraged 100% per day. There's double leveraged on a daily basis. So, I mean, this thing will be great whenever Mr. starts going back up. Let's see how MST did today. I bet MST had a heck of a day today because Mr. did bounce today, right? Heck yeah, MST was up 10%. Holy cow. What was Mr. up? Let's just make sure the leverage is working. It doesn't always correspond exactly double leverage. And over time, it doesn't come out to double leverage. But on a one-day basis, it should be double. So I would think strategy be up 5. Yeah, it's doing its job. It's doing its job. But on a multiple day basis, because of erosion, and not the kind of erosion people think the high yield funds have. They don't really have serious type of erosion like this. This is something called volatility erosion. And it's caused by the daily reset and all kinds of stuff. But in any event, this thing will really erode. Will legit erode. All right, so let's get back here to the show. All right, well, that's MSTW. It's from our friends over at Defiance. Now, Sylvia got her start at Direction You know, she knows a lot about leverage, and to be fair, the Defiance leverage products do a really good job. All right. Now this is leverage plus income, but still it's, you know, but their leverage products are do a great job. All right. COYY. This one, of course, is based on Coinbase from Granite Shares. This one also has a little bit of leverage, but this doesn't leverage it in the same way Msty does. These guys sell options. They sell leveraged options on the underlying. I forget the ticker, I forget the ticker. It doesn't matter, but they write put spreads. A put spread's the same thing as a caller. You don't need stock. You just sell a put spread, and it's the same thing as don't need stock plus selling a call and buy to put. It's the exact same thing. Anyway, so they do have long exposure to COYY through these leveraged options. But in any event, I wonder how it did today. Yeah, thanks for being here, Brad. I need to take that. I need to remember to take that off the screen after I'm done talking, so it keeps the disclaimer up there. All right. Yeah, my arm hurts. That's why I'm leaning back, and you can't see me, but I'm putting my arm. It's like you hurt it in football. You know how when you run too fast and you pull a hamstring and it just hurts so bad? That's what it's like. It's almost like a spasm or something. Anyway, I'm just cramming it against the edge of the chair to give me some relief. All right. So this thing was up 3.32 today. Okay, well, let's see what Coinbase was up. Like I say, this isn't double leverage, but usually they get a little bit more upside than something like Coinbase. It's leveraged in a different way because they're selling options on leveraged derivatives. And actually, yeah, they actually didn't get as much upside as Coinbase did. Okay, well, whatever. Selling options on the leveraged derivatives also gives them a higher yield because the leveraged derivatives are more volatile, so they have a higher IV. So really, Granite Shares is about yield first. You know, same thing with Yield Max. All right, so that's the daily factor. Then we have MSTY. This one needs no introduction. Everyone knows about MSTY, right? I mean, this is house money for a lot of people. Not for me. I bought it last December, and I've been getting killed in it. But if I would have bought it December before that, I'd be house money right now. So this thing was up 5.42 today. Good job. All right, so then our next contestant is ICOI. Now, this thing is from Bitwise, and I forget exactly what they do on this. This is some type of leverage or something. Anyway, MSTW is from Round Hill. It has 20% weekly leverage. You can see the price this quarter has gone, and this is just the NAV, not the dividend. Excuse me, has gone from 37 to 13. That's, 80, or it's lost 65 cents, 65% of its value. Then we have Coney. Coney's only lost 32% of its value. It's gone from 6.9 to 5.6. Everyone here knows about Coney. Then we have COIW. This is from Round Hill. This has the 20% weekly leverage. This could be a good one if you want that. NAV's gone from 40 to 24, down 38%. And we have CO2. CO2 is down 27.5% on NAV, dropped from 23 and changed to about 17. It's a 69% yield. Then we have STRC. Now, this is a preferred stock, and obviously this one's going to win because it's the only one that was up on NAV. So, I mean, but in any event, this is based on MicroStrategies, and it's a good one. I thought about getting it myself. It's also, they're trying to kind of recreate the way a stable coin trades. I don't really understand that too much, but I hear stuff and I repeat what I hear. Then we have STRK. That's another preferred fund based on MicroStrategies. There's a few in here that did not that we don't have. For one thing, we don't have IMST, which is from Bitwise. For whatever reason, the freaking Google sucks again, and it's some of the prices weren't coming through. So on some of the stocks, so we don't have IMIST on there. I don't think IMIST would have won anyway. And there may be, if one of your favorites is missing, maybe it wasn't on here either. I mean, maybe it was one of the ones that's not working. I don't know what the heck is going on with Google. I'm going to hit refresh again just for, anyway, Google's making me mad. Yeah, TSLW's not, half the stuff's not working. So anyway, I'll deal with Google on my own time. All right, so back to the daily factor. Back to the daily factor. So we have NAV return. We can sort it by NAV return. I mean, it's obviously going to be stretch, STRC. Strike is number 2, and then the rest of them. Probably not fair to compare Coinbase and MicroStrategies because Coinbase isn't as down as much as MicroStrategies, but I figure we just throw them in the same thing. Let's look at the stability. Now, this actually is an index that's, see, I made a VIX for all of these. And so I made an implied volatility, or I made like a VIX. I made a VIX for every one of these, but VIX tells you if something's volatile. In the high yield, we want things that are stable. So I made it. So I did some math and I made it a stability index, but it's based on the VIX that I've set for these, that I've calculated for these. So anyway. So 1 would be as stable as the SPY. So that's kind of our benchmark. If it was 2, it'd be twice as stable as the SPY. 1.5 would be 50% more stable than the SPY. A 0.50, it'd be half as stable as the SPY or twice as volatile. Anyway, stretch is about an 83. I mean, pretty darn stable. You know, not quite as stable as the SPY, but I mean, heck, it's based on MicroStrategies. What do you expect? Now, Strike is not that stable. It's only a 39, and the rest of them are just disasters on stability. But heck, they're based on these DeFi stocks. Well, actually, COYY is actually 28% as stable as the SPY. ICOI is 22%. But once you get down into these numbers, this literally means these things are 5 times as dangerous as the SPY. Or let's just say they move around 5 times the magnitude. You know, so they're all over the place. They're just great. And stability is not the be all and end all. You don't want a stable one in a bull market. If you know, Mr's going up, probably the one that's the least stable, being MST, would be the one that you would want. If you knew for sure that Mr. was going to go into a bull market, you'd put all your money in MST. But we don't know that for sure. So when we're planning our portfolio allocations, the stability decks can help us allocate in a smart way. So MST is 10 times as crazy as the SPY, and the SPY is not super. You know, the SPY can bounce around 2 or 3%, go up 2 or 3% some days, down 2, 3, 4, 5% some days. That's not super stable, but just imagine this is by a factor of 10. So anyway, all right. So you guys behaving yourselves? I think we know which one's going to win. Hey, Dylan, how are you doing, bud? Yeah, Brad, I hope we rally into Thanksgiving also for sure. All right. So, I mean, like I say, we know who's going to win. I mean, because there's no contest. I mean, something that protects the NAV, even though it's only up 10%, to me is more valuable than something that pays 277%, but its NAV is down 58%. Wonder if you had a margin call because its NAV was. I wonder if you were trying to live off the ETFs and you weren't dripping it. So you're taking the ETF, you know. So, I mean, it's no contest. Strike is number 2. CO2 is number 3, and that makes sense. Rex is a pretty reasonable company. Now, what Rex does is they only write options on half the portfolio. So they leave the other half of the portfolio unencumbered by options to grow just as much as it wants to. It's a real sane plan. Now, Rex also uses just a little bit of leverage, but they only use leverage on half the portfolio. So, I mean, it's a very sane plan. I don't like single stock ETFs, but if I had to buy, if you guys made me buy a Coinbase single stock ETF, as much as I love YieldMax, I would get CO2. And I like Roundhill a lot also. In fact, I have COIW in my portfolio right now through the fund of funds. And I'm fine with the fund of funds with leverage on it, but I don't want a single stock levered, totally capped upside, totally levered. I just don't need that kind of excitement at 59 years old. All right. Well, that's all I got for you guys. What do you guys want to talk about? I'm sorry I left you. That show today was really short because I wanted to get Jackson to the park before the sun went down. But I'd be happy to talk about whatever, or if not, I'm going to get out of here and go make that new video. I'm planning a really good video for you guys. One of my friends, I got up first thing this morning and I got a really good question in my Discord from somebody, and I answered the question, and him and I went back and forth a couple of times, and I was thinking, this would be a great video topic because there's probably other people that would like to, that have the same question. So I basically turned his question into a video. Yeah, you think a Mr. Long Short ETF would be great? I don't know, Froggy, were you here in the afternoon or were you here in the morning show? Somebody, it was Marcus, I think, made the point, maybe if somebody had blocks, like, because blocks is a great fund, but it's highly levered to crypto. It's just, maybe 50-50 blocks in winter might be a good allocation, or 75 blocks and 25 winter. But yeah, I think people are doing that. People are doing that themselves. But yeah, I've always asked these funds why they don't come out with a fund like that. And the fund could professionally rebalance it. Unlike us, I just set it 50-50 and forget about it, or 80-20 or whatever. But a fund manager could look at it every day, and based on different conditions could keep it perfectly balanced, and I'm sure it could do a lot better job. All right, Dylan, you didn't have a close upper resistance and 50-minute RSI kept going. You didn't have, okay, let me go back. Oh yeah, I got you. I didn't see your previous comment. Let me go back and make sure I haven't missed anything. Do we expect a continued pump tomorrow or flat trucking? I don't know. I mean, there's a number that comes out in the morning, isn't there? Some kind of economic number. So I mean, that could change it. That could change it. One day at a time. I don't expect anything, but I'm just sure hoping for it. We could take our cue from futures. I mean, the cues are flat right now. They're down 7 basis points. They've gone sideways from the close. The thing is, at some point, sellers are going to come back in. That's all there is to it. Market can't go up every day. When the sellers do come back in, the key thing is, will we hold the moving average? And if not, even if we go under the moving average, just a line on a chart, will we make a higher low than here? That would be great. Even if we lose this low, will we make a higher low than here? That would also be a bullish sign. Can we build a base and then maybe go higher next time? We'll see. But I don't really know, Joe. I don't know. I should have stuck with Joe. Let's see here. Yeah, I hope we rally into Thanksgiving as well. And there is some kind of trend that we rally around holidays. And, I forget the exact trend. The week before the 4th of July is usually a good week too. July 3rd is usually a huge up day. All right. Now, Dylan had a rough day trading. I hate that. Keep waiting for reversal and kept DCAing, took a big hit, wiped out 75% of your gains. Oh, I hate when that happens. I mean, that's trading for you though, but yeah, I'm glad last week was a great week for you. Just look at it this way, Dylan. If you wouldn't have had such a good last week, you would have really been screwed today. At least you had gains to wipe out today. I'm not saying that that's ideal, but yeah, I mean, agree with that, Froggy. So you didn't have a close upper resistance, and 50-minute RSI kept going up. But yeah, you kept wanting to sell the rip, right? And it just kept going up on you, I'm thinking, because you're like, this can't keep going up. I mean, but it did. That's what I was kind of interpreting that. You don't hold short funds long term. I've been holding YQQQ forever, but I'm also underperforming. I mean, so I don't know that that's a great endorsement. But my my model portfolio compared to the SPY is lagging a little bit. My model portfolio was up 13% at the highest, late September, early October, and the SPY was up like 16% or something. So I'm behind 300, 400, 500 basis points. But that YQQQ helps me sleep at night. I do a little bit better on down days, but if I was smart, I probably would have dumped it too. I don't know. I need to rethink the inverses. I like the inverses, but you could probably do the same thing just by keeping a little cash, or just by investing in something that a box spread fund, that does box spread, something like TOAK. TOAK is one of my favorite box spread funds. Anyway, have I decided? Yeah, I decided not to dump blocks. I wanted to cut blocks a little bit at the close, because last week I was telling myself blocks was just murdering me every day. And I was telling myself, I don't want to panic and sell on the lows. We're probably going to get a bounce, but I was promising myself, I was like, please, Lord, if we get a bounce, I'm going to cut my blocks position in half. This thing is murdering me. But then it went up today, and then I started thinking, all right, Lord, please give me another update. Maybe I'll do it tomorrow. It's kind of like when you get drunk and you promise, you promise that you'll never drink again, and then Friday night comes and you're back in it. Anyway, I skipped your delisting question. My bad. Okay. Is the possibility of Mr. being delisted a real concern or a bluster? It's clear Jamie Dimon hates Sailor. Yes, I agree. I really don't know. I was asking Grok about that earlier. Not the exact same thing, but there's a rumor going around that people are short, that JP Morgan shorted Mr. And if Mr. doubles in price, it'll put JP Morgan out of business. It's total BS. JP Morgan said, total BS, because also they aren't just naked short. Even if JP Morgan is shorting it, which I'm not even sure that's true, but even if that were true, JP Morgan is shorting it and they're buying Bitcoin futures. I've heard hedge funds are doing that trade because MicroStrategies has some weaknesses in it, and hedge funds have been hammering it down, but they're long Bitcoin. They're doing it as a pairs trade. So even if JP Morgan is shorting it, it's not because they hate Bitcoin, so I don't know. And I asked Grok, and Grok put me off. I said, Grok, this has got to be BS. Tell me, am I right or not? But anyway, does Grok save the reply? Yeah. I put, is JP Morgan really shorting Mr.? I think they are, but what is the other side of the story? I think I heard they were shorting Mr. on long Bitcoin. It's an arbitrage. Maybe not them specifically, but I heard hedge funds were doing this trade. Fill in the blanks, please. And it said, and I've paid my bill and everything. I have premium. I don't know why, but I really want to know that question too. It's a fair question. Let's see. Copy. Let me just get a new window up here. I guess we could go ask Claude. I've really had good luck with Claude lately. Claude's way better than Gemini. Way better. All right, let's see what Grok says. Grok is unable to reply. Grok is too woke. It's probably because, I'm just joking. I don't know. I was trying to think of a conspiracy. It's because Elon Musk and Jamie Dimon are friends, and Elon won't let Grok tell us the truth. I'm just joking. But anyway, what do you guys think on that? I'm glad you brought that up because that's something I've wondered about too. My rule is 90. My rule is not 90. My rule is 105% of the stuff you hear on Twitter is wrong. Whatever the crowd thinks on social media is not true, and usually the opposite's true. I wouldn't be surprised in real life if Jamie Dimon's buying MicroStrategies or something. That Grant Cardone guy. There's a guy named Grant Cardone. I think he's an idiot, and he's closing his account. JP Morgan, you could have 1,000 guys that have as much money as Grant close their account, and JP Morgan's fine. I'm just not buying the conspiracy on that. I think it's BS. All right. But that's my opinion on that. Let's do this though. Let's go ask Let's go ask Claude. I need to change the name or he's going to get his feelings hurt because I said, hey, Grok, I think. Oh, shoot, I didn't copy it. Or, yeah, I did paste. No, I didn't put it. Okay. All right, let's see what let's see what Claude says. My arm's feeling a little better. I just sat there typing too much. I think I didn't really pull a muscle, but I got like a muscle cramp from just sitting there all day. It's just, oh my God, it hurts so bad. It's the main reason I was late. I was ready to go on about 8, but I just sat here just going, oh man, it hurts. All right. So Jim Chanos is doing the long Bitcoin short Mr. That's an arbitrage. I've seen that. I know that's the thing. Won't be surprised if other hedge funds are doing it. JP Morgan's a hedge fund. They're everything. They're private equity. They're a hedge fund. They're a commercial bank. They're a retail bank. They're everything. So I wouldn't be surprised if there's some truth in it, but the people on Twitter are just such idiots. They have no idea. And not only that, there's smart people on Twitter, but the algorithm boosts the dumbest opinions because the algorithm looks for engagement, and the dumbest opinions that make people the most mad get the most engagement. People are like, oh, can you believe that? JP Morgan, those guys are, there's no voice of reason on Twitter. All right. This is what you remember. Jim Chanos publicly announced in May that he was selling, and buying. Okay, so that's true. I did, and he emphasized the trade wasn't about prediction, Bitcoin's direction, but exploiting the spread between Mr. and I knew that. The trade worked exactly as planned. The YMNAV multiple narrowed from 2 to roughly 1.2 by November. Chanos covered the trade. The thesis was largely played out. Okay, so that was right. I had that right. I may be as crazy as the guys on Twitter. I don't know. Okay, JP Morgan situation, much murkier. So this is hot drama from the past 48 hours. JP Morgan is facing growing online backlash after Post accused the bank of engineering a targeted hit on strategy and taking a huge short. I bet it's BS. I know it's BS. Anyway, JP Morgan was actually long, Mr. See what I said? That's exactly what I said, not shorting it. Okay. The MSCI concern is legitimate, and that was your real question. So I'm sorry that it took me this long to get the real question, but the MSCI concern is legitimate. MSCI is genuinely weighing whether the companies whose digital assets holding exceed 50% should, because is it really a stock or is it a commodity at that point? Anyway, if implemented, the outflows could amount to 2.8 billion. Excuse me. From MSCI indexes and 8.8 altogether. Oh, I'm sorry. You guys can't see this. Gosh darn it. At least I'm reading it to you and not just pointing on the screen. My bad. But I want, this is interesting though. So here's where I'm at. It right here, it said that I was right about Chanos. There's the Chanos thing. And then they're saying much murkier. But point number one is, yes, JP Morgan was actually long, but they did divest $50 million during Q3. They weren't short. Okay, so MSCI concerns legit. The margin hike has a boring explanation. JP Morgan raised margin requirements from to 50 to 95 back in July. Standard risk management. That's a nothing burger also. JP Morgan is embracing crypto. The company now plans to accept Bitcoin. Yeah, of course. Some pushback on the conspiracy. Not everyone bought the idea of a scripted assault. Some users argued the market reaction is emergent behavior following genuine concerns. Yeah, that's all it is. It's nothing. But I am worried about them getting delisted. I mean, I think the delisted is legit, but you guys got me off on a sidetrack because I just think that Grant Cardone guy's an idiot. Just not only him, just all the crowd on Twitter's idiots. They anything the crowd thinks is happening on Twitter, usually the opposite's true. Just my opinion. All right. So what else do you guys got going on? But that prompted why Froggy said that he thinks a long short would be good. I get it. I missed that. But I swore today, I think if Blocks goes up one more day, I will cut like a third of the position. If I can get another rally out of it, I don't know, but I might change my mind because I mean, I'm always going between fear and greed. Last week I was fearful because I kept seeing my account go down, and I promised, but I wasn't so fearful I was going to screw up my account by selling on the lows. But at the same time, I promised myself if I get a rally, I'm going to line up, and then I didn't do it anyway. Okay, so we got the delisting question answered, but yeah, I am worried about delisting. Whistler Brad took some profits from winter day, still holding a good amount. Yeah, I bought Salty last week. I'm probably down in it. I bought Salty about a week ago. I don't think but I don't really think that the sell-off's over yet. You think Diamond is trying to snake Sailor? Probably so. I would buy that. Diamond hates Sailor. They're both of them have huge egos. I'm with you. Long Bitcoin, short MicroStrategies. Yeah. Is Google the new NVIDIA? Well, it's acting like it, isn't it? Gemini's getting better, but I'll give Gemini another chance. I mean, but I'm just really, Claude's made some improvements just in the last month that have really impressed me. Because I use it on a daily basis, and they just added things that I'm like, damn, that's really good. Yes, and that is true. Now, this is another thing, and I know that story too. Of course, JB Diamond called Bitcoin a pet rock. Now, he said that like 5 years ago, and I bet this was untrue, but the conspiracy on that one was, and he was buying Bitcoin the whole time, and he's really just trying to get a lower price. And that may have been true or whatever. But yes, Jamie Dimon it's never like crypto, but I think he just got drug along. He's a boomer. He got drug along and had to put it in the portfolio. So yeah, I mean, I'm with you that there's probably some legit hate there. I'm just saying Twitter's not a good place to get information. MNAV for Mr.'s 87. Yeah, that's crazy. I agree. Still getting used to the new monitor I see. One day I'll be on top of it. I'm getting better at it. And what I need to do is whenever I'm just talking, put the market back on the screen in case it starts moving or something, right? Anyway, Alti has made some changes and it's looking better. I agree, Greg. I totally agree. And I'm making content about Alti tonight. The video I'm making is called Why Won't Alti's Price Go Up? And it's probably the best video I made in a while. Or it's the most well thought out. I sat here all day and typed the script out. Lots of times I just come on here, no script, and just wing it. But no, I've got the script typed out. I've got the slides planned. It's going to be a great video. Like I say, if I want to leave a little bit early tonight, it's just because I want to go make that video. But I'll stay here and talk as long as you guys want. I'm not doing anything other than making that video. I'm just glad my arm's feeling better. All right, Truckin', your HOOW positions recovered. Truckin', is your real name Joe? Is that why you said you should have stuck with Joe? I'll try to remember Joe if that's your real name. Somebody else told me their real name today, and I've already forgot who it was. It was in the afternoon show. Oh, it was 703 RJC, and I was calling him RJ, but his name is Randy. Anyway, I don't see Randy in here tonight, but I'll remember your names. Okay, Joe, I got you now. Joe, the truck driver. Yeah, Alti's not necessarily going with the high IV, but they still have plenty of those stocks in there. They still have, I'd say 70% of the portfolio is still those same kinds of stocks. They aren't just lowered the IV. They've lowered the IV by putting Google in there, but it's not only about lowering the IV. They've also put GDX in there. They're putting assets that aren't correlated. They're kind of copying off Howard. That's Howard's secret. Howard doesn't really have hedges on per se, but Howard's whole portfolio is uncorrelated. The way Howard builds his portfolio, it's a different thing. Really, they're probably, I'm just joking, they're copying Howard, but I think Mike Coe coming on board made an influence. They put him on not the trading team, but they put him on the call where they discuss stuff. And I think his input may have helped. But anyway, yeah, they've added, but yes, two things. They've added stocks that do have lower volatility and they're more blue chippy, so they're more stable. It might make the yield go down a little bit, but they've also adjusted the option strategy, I think, to kind of negate some of that. But they're also, the main thing they're trying to do is get some anti-correlation. Costco and Bitcoin aren't correlated at all, probably. Salesforce and Bitcoin probably aren't correlated at all. Google and Bitcoin may have a little bit of correlation, but they got some things in there that aren't cipher mining and Mara and and all the Bitcoin things they have in there. So yeah, for instance, Costco for sure. Costco's not correlated to Bitcoin at all, I would imagine. Joe, the retired truck driver. Okay, well, I just try to remember stuff that way. But anyway, full-time trader. That's awesome. Not a great one. Me either. But I'm working on it every day. So Froggy says he really likes Mike's notion of having the NAV keep up with inflation at a minimum while throwing off income consistently. That's the goal. Even he said he can't guarantee it, but that's the goal. That is the goal. But here's a real simple way to think of it, though. It doesn't matter what they do, what kind of options they sell, whatever. At the end of the day, they can only give out what they make. So you can look at the compound annual growth rate, or you just look at the 1 year return. If the 1 year return is 20% and a fund paid you 40%, it's gonna come out of the NAV. That's all there is to it. So at the end of the day, yeah, keeping up with inflation, that's great. But at the end of the day, these funds are really just trying to make the most money and most growth they can have. I know it doesn't seem like it with some of them, but at the end of the day, that's how you stop NAV erosion, is by having winning trades. I mean, you have to grow the base of assets because remember the yield, the dividends paid out of the NAV comes out every week. So you can pay a huge dividend, but then you put your NAV under more pressure. You guys all understand this, but that's pretty much kind of the video I'm making tonight is because, I have like 50 of you guys that watch this show. And I say this, you guys all know this stuff because I say it all the time, but I'll get, a couple thousand people that will watch my videos, and a lot of them aren't regulars. So that's basically what I'm going to talk about tonight. I like WPay a lot. And I like QLDY a lot. Let's go look at something real quick. That's a good point. Let me bring it up on this. Yeah, I know how to do this now. Look at, there it is. There it is. Fool me once, shame on you. Fool me twice, never going to fool me again. Remember that? Remember when George Bush said that? He said, back in the old West, we have a saying, fool me once, shame on you. Fool me twice, never going to fool me again. That's a classic Bushism. All right. So let's look at this daily change. But yeah, this is impressive. I mean, there's not one other day, and I'm talking all of them. Yeah, I know ULTY was the worst, but it was the best yesterday. But still, if you just take all of them, it's the best day we've had in forever. I mean, since these funds have been around, the next closest day was the third day was November 2nd. But then we hit like mid-November and we started selling off, and then we continued selling off. I mean, it's been rough. It's been rough. Then we had some days where some were up and most were down, like on this day, Blocks did really well. Blocks is badass. I mean, but everything else was down. On this day, ULTY, which is also a really badass fund in my opinion, did well, but everything else was down or made less. But, everything was up, just like on this day or this day. And to be fair, everything was up except except ULTY on this day. Oh, well. But everything was up except LFGY on this day. But anyway, you guys see what I'm getting at. The rolling total returns what matters. This is how your money compounds. Right now ULTY is down 14.8. I mean, that's not great, but K-Yield's a good-looking fund. It's down 11, or it's down 11 and a half. So it's not down much less than ULTY. WPay is a good fund, and it's down 11.2. But that was my point. WPay, K-Yield, and ULTY, for that matter, have held up pretty well compared to LFGY, Blocks, and ULTI. But ULTI is coming back. These also make money. They get more upside. So we'll see. Yeah, it is nice to have a green day. I missed the show this morning. My good buddy SB was on there, and I really wanted to hear. SB is one heck of an option bro, and I always enjoy when I talk to SB. And I'm sorry I missed your show, Retire. I need to go back and listen to the replay. It's been raining all day here in Austin. I just made a new video that's going to be a big hit, Retire. Look out for it. It's called Why Won't Alti's Price Go Up? And it's not like a wise ass video. The last Alti video I made was for the trolls, and it was kind of a wise guy video. But this one's a serious video, not for the trolls. It's for everybody. All right. Joe's biggest fault as a trader is not letting winners run. That's hard. Focus too much on getting to win. You can absolutely cost yourself money. They say and my dad used to tell me and my grandfather, it's an old boomer saying, you never go broke taking a profit. That's what they used to say in the old days. You know, when I was a star, I've heard that a million times. You never go broke taking a profit. That's not actually true. You may not go broke, but I guess it's true, but you can absolutely cost yourself return by taking too many small profits. That you have to have some outsized gains. That's the reason I'm not a big believer in selling options. I think I am a believer in selling options 60 to 80% of the time, but I think some people like the tasty trade methodology where they just sell every option they could find. I don't think that's the right way to do it. I think it's like I compare it to football. In football, college football, usually you want to establish the run, but you need to have a good passing game to establish the run. You know, you want to mix it up to keep the defense off. It's the same thing in the market. You want to occasionally buy premium. Somebody that agrees with me on that is Howard. Howard right now has 3 long premium positions on in K-Yield. You know, where every other fund I cover is all short premium. They just sell options, sell options, sell options. Howard actually has 3 long premium trades on. Actually, to be fair, ULTY has 1 long premium trade on now. ULTY owns a call in IBIT, which did really well today. But I really think the perfect option trader, you know, sells premium most of the time. Just like in football, you want to run most of the time, you know, or maybe not anymore. But back in the day when I was growing up, you want to run most of the time. But if you just run all the time, the defenses will stack the line and they'll shut you down. You have to be able to pass. So it's the same thing in options. You have to be able to get an occasional big winner to offset a bunch of small losses that you get. But yeah, that's a very common problem. The way I solved that, and I didn't really solve it. I'm not a great trader, but what I do when I buy premium, if I buy, I did it last week. Let's say I buy a put because I think the market's going to go down. I did it last week. I still didn't make money, but I mean, here was my plan. You buy a put, and let's say you pay $1.50 for it. So I always get 2 of them, or 20 of them, whatever. I always get twice as many as I want, or I always make sure to have multiples. And what I do is, as soon as I put the trade in, I'll put in a limit order to sell, good to cancel at double on half the position. And lots of times it'll hit that, and then the rest of your position's free. You have a free runner. And if the market really craters, you'll make bank. I did that in April. I took off half my position when I got even, and I let the runners run, and they freaking ran. And then I covered him, and I rolled out, did the same thing again. And on the rollout, I hit a double, covered it, and let the runners run. And I did it a 3rd time too. And then the 4th time, I did it. It didn't work out, and I ended up losing the money. But I had progressively locked the profits. So that's what I do to try to alleviate that situation or try to minimize it. I will lock the profits progressively. You get your 1G and flee. Okay, yeah, that's another plan. Just set a daily limit. You know, a lot of day traders that trade futures do that. You know, or you know, they're just trying to set an amount and leave. But that can also be a problem, though, because there's some days when you leave with 1,000. If you would have stayed around, wonder if you would have left with 1,000 in 2020 or something. There's some days I remember. I mean, there's some options that turned into 10x plays in 2020. I mean, it's the exception and not the rule. But once you have free runners, once you don't, I remove my risk from the trade by selling at a double. is what I'm saying. Anyway, that's what I do. Yeah, I'm dreaming of a green open too and a white Christmas. I haven't even shot it yet, Rod. I was going to shoot it before I did this video, but I took Jax to the dog park, and then I came home and had dinner, and then my arm was hurting. It's a long story, and then I was late getting this on. So as soon as I get out of here, I'm going to shoot it, and I'll probably put it to premiere like 7 in the morning. I think that's a good premiere time, and it's going to be a good video. I bet it gets 2,000 views, which is good for me. My last video, it wasn't really, it was kind of disingenuous. It was kind of for the trolls, but it got 1,500 views. But this one's a lot better than that one. This one's a serious video. Dylan, you tried explaining your strategy on the Qs to SB for some advice. He said that he might have to learn from you. Well, that's a good sign. Oh yeah, you have different trading styles. Absolutely. Well, SB and I bounce strategies off each other all the time. SB will tell me about a strategy, and then I'll get an option strat, and I'll try to make what I call a better strategy. But what I finally figured out, I'll just go to option strat and make a strategy with less risk than his somehow. But it's not really better. If the market goes up, his strategy will do better. In other words, I'm more of a panicking than SB is. But yeah, but SB is a good resource. Yeah, I mean, but that's the thing, Greg. If you just buy 2 options from now on, and just set a target on one of them. It doesn't have to be a double, but a double means you're risk free. Buy one at 1 and sell one at 150. Okay. And then when you're out, you've made 50% and you still have one alive, then move your stop to break even on the other one. And then you're risk free, or just let the other one run to 0. I don't really believe in using stops on options. But I mean, I know some people do, but that'd be a way to do it, or buy 3 of them. Buy 3 of them. Get out of one at 25% profit. Get out of the second one at 50% profit, and then let the third one run. If you're lucky enough to get out of the first 2, you've made your money. Let the third one go. Rod, I still owe you some stickers. I forgot this morning during the stream. Okay. Yeah, I just didn't get up. I just didn't get up. I'm going to listen to it on replay. Listen, okay, Joe wants to look at the Tesla chart today. Golden cross when the market opened, stayed 10 over 20, and the price over the 50 almost all damn day. My 1G should have been 5G today to stay in. Well, would my trick on using multiples, you can also do with technical analysis. You could say, okay, I'm going to buy 2 contracts. I'm going to get out of one, at this point on the chart, whenever the RSI is over 70, and then, or whatever. I mean, and then let the other one run. But let's pull up the Tesla chart today. If I get any better at this second screen, it's just going to be, I'm going to be the best influencer on Twitter next to Rod. But I'm just working this second screen out. The funny thing is, I remember when Rod used to do all his shows off a phone, and I used a MacBook, and Rod asked me, what do you use? I said, I use a MacBook. Then Rod went out and got a MacBook, I think, and started doing it, because you have to have a MacBook once you're doing manager interviews and stuff. But at first, when Rod started out, before we were doing manager interviews and stuff, Rod would just get on his phone and let her rip. Let her rip. All right, let's look at Tesla. Yeah, what time frame were you looking? I don't have your technicals up there and stuff. If you're looking at the golden cross on the daily, I look at the 30-minute bars, and I look at the 50 and 200. So I may look at a different golden cross than you're looking at. But you could do the same thing on shorter bars. Like you could, if you're trading like real actively, you might want to look at the 5-minute bars or something. And you can kind of drill down and see more stuff on the 5-minute bars. But yeah, we had a golden cross on the 5-minute bars, today, and then it just kept running. That's probably kind of what you say. Yeah, there you go. See, Joe and I think alike. 5-minute bars. Absolutely. Absolutely. Well, it depends on what you're doing, but for short-term trading, swinging in and out of options on a daily basis. Yeah. 5-minute works fine. I'm trying to not trade so much. 2022 or 2021, I traded too much. I had like 6,000 trades in a year or something, just because commissions were free and I went crazy. I never met a trade I didn't like. You know, I mean, I'd put a bullish butterfly, directional butterfly on NVIDIA. Then I would start to think about it. Then I'd slap a bearish one on there too. Commissions are free. Why not? It has to go one way or the other, right? I mean, but anyway, so, but I kind of got serious about it in the meantime. And to me, the 30-minute bars work. It give me the enough resolution and give me enough trades without just giving me too many trades. I tend to be a little manic or you know, self-destructive. Because I like to trade. What I figured out is I like to trade more than I like to make money. I mean, and you have to decide, are you trying to make money or are you trying to make trades? I mean, I'll try to make both, but it's just so fun to make trades. And I hadn't traded in years and stuff. So when I started trading in 2020 and 2021, I just went batshit crazy. Trading futures at the same time as I was trading options. I might be short futures and then long options. I'd just be all over the place. Big money game playing with Tesla, you think. So what do you guys see? So let's get a longer term chart on Tesla. Let's get like a daily chart out for more swing trading. I think the 30-minute chart works for swing trading too. But yeah, so this is, so I'll tell you what I see. I see a trading range up here developing at 422. We were in one a few weeks ago, or it's not a few weeks, back in February, and we fell out of that range. And we, you know, really our main ranges are down here, but now we're back up here trying to get reestablished in this old trading range we were in. But I mean, also you can, I mean, it doesn't look, if we don't take out this high, you know, that's not good. Or if we do take it out for a day or two, then fall back in, that's not good either. Doesn't Tesla have a lot of exposure to Bitcoin? I mean, not indirectly, and don't they own a few Bitcoiners? I'm just saying, I would think if Bitcoin goes back to all-time highs, maybe Tesla will keep going up. But yeah, when I get into something, I really get into it. That's right. That is right. 10K. I'm trying to think what the answer to 10, what it was I was saying. Oh, your 5K should have been 10K. Oh my gosh, yes, that's frustrating. I know that feeling. So, I mean, I'm not a real big believer in setting a limit and getting out. I mean, for me, I'd like to have $100 extra a day. That $100 a day is $24,000 a year. That'd be fine. Or say $200 a day. That's $50,000 a year. So I'm going to trade futures. I'm going to just try to make 200 a day. So when I get to 200, I'm going to get out. Okay. The problem is, though, a lot of your gains come from the days when you just kill it. I mean, I really think you have to, you know, just making 100 a day or 200 a day, even though it, you know, might seem all right, is like a football team that's like, we're just going to run it up the middle every time, you know, to me. Oh, yes, Bitcoin. They have 10,000 Bitcoin. Okay, well, but anyway, so they're somewhat levered to Bitcoin's price. It doesn't look like they're too levered because Bitcoin's been getting killed lately. And well, Tesla, I guess I'm used to looking at the shorter term charts. Okay, Bitcoin topped out in July right here. So Tesla's managed to go up even with, I mean, they have some exposure, but, you know, but it doesn't look like they're that levered to Bitcoin. Nothing like MicroStrategies or Mara or Coinbase or something like that. Anyway, hopefully Tesla can make a new high, but that chart doesn't give me enough trades. That's too long term. So I think the best time frame is this one. I think this time frame gives you the resolution that I need. This is what I need. You only trade stock. Okay. Yeah. Well, okay. So you aren't trading options, but I got you. Here's buying 1,000 shares and then getting out. If you make a point, that's $1,000. I mean, yeah, no, I got it. Or buy 500 shares and make 2 points. Buy 200 shares and make 5 points. Yeah, that works as well. That works as well. What else is going on? You guys want to talk about anything else? Let's see if the NASDAQ's still going up. Or says actually coming down a little bit. Oh, it's up now. Look, it went from red to green, red to green. YOLO, baby. Hopefully, with any luck, maybe we'll have a bullish week. Let me give you a scenario, but where the sell-off's not over yet, but it's where we can have another bullish day and I can get out of my blocks. Okay, to trap this time. That was the NVIDIA trap. Get one more bullish day, and we go up above here, and then everyone's for sure back in. Then everyone piles back in on the long side. But also right here, we have a low volume node at 25.4. Lots of times low volume nodes will stop the action and make it go the other way. It's like a gap in the chart. It's bullish above, bearish below. That's a key level. We could go up to that. We can make a new high, a new local high, and we get up here, and the same sellers that were here back here could still be there. And they could, and they could hammer us back down. So that's a scenario where we could get one more day and maybe still the sell-off isn't over. But even if that happens, as long as we go down and make a higher low, we can start building a base. I mean, it wasn't a lot of the stuff that happened to Bitcoin because of margin calls. Hopefully those are all done. There was some kind of glitch in the system. But so hopefully the glitch is done. The margin calls are done. And also people like Jamie Dimon in hedge funds probably really bought Bitcoin down here, banks and stuff, hopefully. And so that'll be supportive of prices, or not Bitcoin, whatever, you know what I'm saying, Bitcoin, whatever. But hopefully the sell-off's over. That'd be great. I want to get one more high into the end of the year. I'm like Brad. I want to get one more rally into the end of the year. But then if that happens, I'm for sure lightening up. If we get to an all-time high, I'm going to I still don't think this is a healthy market or a healthy economy or a healthy anything. If we get to another all-time high, which I hope we do, then I'm going to cut back on blocks at a huge profit. But I'm going to cut back on blocks, and I'm going to put some barrier funds and some auto callables in, and some safer stuff. I might even get CLM or triple QI or something. I don't think next year is going to be a good year. So I'm going to try to de-risk, especially if I can get to a new all-time high. You have 250 shares is 100K for Tesla. Well, true. Okay, true. But whatever, I don't know how much money you have. I mean, but I'm just saying, yeah, that is a lot of money. That's why I don't use, why don't you just use call options? Because the thing about a call option, because when you're trading shares, even if you're trading 100 shares, Tesla can drop 5 points like that and you've lost $500. So you have to use stops. Tesla can easily go up 5 points or 10 points. You can make $1,000, but you have to use stops. What I do is just figure out how much your stop would have been if you bought stock. Or say you usually trade 100 share lots of Tesla and you trade with 5 point stop losses. That's $500. Well, just buy $500 of at the money options and let it go to zero. Don't use a stop loss. If it goes down, it goes down. You'll never get your stops run again. Because when you're trading futures and stock and you have to be ultra concerned, when you're trading stock or futures, a 5 point loss could turn into a 10 point loss. And a 10 point loss could turn into a margin call. You can't bluff the market, but you can with options. Use the same size you would use. That's another strategy I like to do. I never use a stop loss on options. The money I use initially is my stop loss. Yeah, it averages $10 for day, but I was just trying to make a point. I'm just trying to make a point. All cash. I got you. I need to make a video on why I don't believe in stop losses. On options, I don't believe in them. On other stuff, I do, but on options, I don't believe in them because options, the coolest thing about buying an option is you have asymmetry. And that's why I think options are so much better than stocks, especially for swing trading and day trading, because stocks don't have asymmetry. It's just as easily, to drop 10 points as it is to make 10 points. And you can't play with, because there's no limit to what you can lose on the downside. You have to watch stocks and futures like a hawk. I think I just use the same amount in options and just let it run till the end of the day. If it doesn't make it, it doesn't make it. Who cares? But what that will do, though, because it has so much asymmetry, on some days when Tesla's up 20 points, I mean, it's normal is a $10 swing, but you might catch a day where it's up 20 points and your options might 4X. Whereas if you would have put stock in, you aren't going to 4X. You made like 4% or something, which is still good, but I just like the asymmetry. Have you guys heard about the heat formula? My friend, let's look at this really quick. My friend, let's see. My friend Matthew Tuttle Capital Management. He's not really my friend. I wish he was. I mean, he's been on the show once. I really like him. Here's his heat formula, and I believe it. I believe this. I could have made this myself, but okay. So what is heat? Heat formula is designed to cut through the smoke, providing strategies that bring clarity and real growth. Here's what it stands for: hedges, edges, asymmetry. Asymmetry is important. That's what buying options gives you, is asymmetry. And themes. But I'm a big believer in asymmetry. Asymmetry is the coolest thing about options, that you can make 10x. You'll never make 10x on a stock trade. Maybe if you trade stock on margin, and you could do, maybe, but I'm just saying, but on an option trade, you could make 5 or 10x routinely. And the other thing, but really, how many times have you guys got a stop run when you were trading futures? The market makers know when you buy a position and you put here, I'll show you. When you buy, like if we're going to buy the NASDAQ today, or maybe, we buy the NASDAQ today and then we put a stop right under the last low, or say we short the NASDAQ and we put the stop over the last high. How many times do you see it go right above? They do that to get the stops and to set traps, but instead of shorting Tesla, if you'll buy the same amount of puts, figure out what the stop loss would have been, how much money you're willing to lose, measure the distance from there to there, measure how many shares you have, whatever it comes to, take that amount of dollars and buy the same amount of puts and just let her rip. That's the way I do it. I think that's a better plan. Well, yeah, and you don't have to and options aren't the only way, and they do have disadvantages also. Options have an element of time decay in them that the stock, you don't have to worry about the stock time decaying on you. But I think that the extra risk of the time decay is offset by the asymmetry. But I mean, it definitely adds an extra moving part, and it's definitely not for everybody. And it's not like the only way to do it. It is not the only way to do it at all. I wonder how I know if I miss any comments. I guess you guys just have to tell me, hey, Max, you missed my comment. But this is great, not where you guys don't have to see me look through your comments, and I can put them up there if I want to. Well, you're retired now. You have plenty of time to learn about them, and there's plenty of great resources on the internet. I've always told people, Tasty Trade's all right, but the best place to learn how to really make money trading options, in my opinion, is SMB Capital. These guys are professional. They're professional day traders, or they have a prop trading firm. They train traders how to trade. They have a great YouTube channel, and I mean, if you ever want to, I mean, because they don't just tell you, hey, a coverage calls when you write it out. No, they don't tell you that. They say this is what we do with it. Whenever the market pulls back into a support zone, they have a plan that's more about trying to make money, not make trades. They have some great strategies. They have some great, I mean, just if you're into like strategies and stuff and really getting into options, these guys just cannot be any better. But Tasty Trade's a good place to start, and this is a good place to finish. All right, guys. Well, if there's nothing else, I'm going to get out of here. I'm going to go try to record that video, see what's up. Tasty Live. Yes, Tasty Live. I know, and you're right. I love Tasty. I'm not knocking Tasty. I mean, I just think Tom is too in love with selling options. I mean, that's just my opinion. But Nikki Batts and those other guys, they take shots on the long side. You have to occasionally take a shot buying premium. I think. Hey, Lazy Tom, thank you. I appreciate you. But yeah, they do a great job. My favorite teachers, I like Nikki Batts and his partner. I just like the way they think, and I really like Dr. Jim. I've stolen a lot of my stick comes from Dr. Jim. You know how Dr. Jim, he can tell you about any option trade, and he can say, well, for every give me, there's a got you, and that's the way it is on anything. There's anything that you do and you think of it's a good idea, it has another side to it. And it's always important that you can identify the other side and know what you're giving up. Remember, guys, it's not financial advice. Consult a professional financial advisor. Remember, a professional advisor, he knows your situation. He knows that you're on your third divorce. He knows about whatever. I'm just joking. But seriously, he knows maybe that you have a trust fund. He knows that whatever, because you can tell him stuff that you can't tell people on the internet. So they can make advice for you. Whereas people on the internet can just give, general advice, but it may not be advice for you. The advice I give is probably good for my family, but it may not be good for yours. Also, don't forget, if you'd like to support the station and give me a little tip, you can always do that at paypal.me/Max Convexity. And I always appreciate that. I'll get Jackson some new dog treats. But outside of that, you can also just like and subscribe and tell your friends about me, tell your family. At Thanksgiving, you guys can, when you guys talk to your family, you can say, hey, I follow this YouTuber. He's a really nice guy. His name's Max Convexity. I'm just joking. You don't have to do that. But anyway, but you can like and subscribe and tell your neighbors. That definitely works also. All right, guys. Well, thank you very much. Be watching for that video. I'll probably come out at like 7 in the morning, but it's going to be a good video. Probably nothing that you guys haven't heard yet, but I really think there's people out there in the world that need to hear this video. So I think it's going to be one of my better videos. All right, guys. Well, thank you so much. And you guys have a wonderful rest of your evening. And I will talk to you guys in the morning. See ya.